Hello, Forex traders. Hello, Forex traders. You are actually welcome to today's Traders Focus. This is Traders Focus episode 5. Traders Focus is a series of videos where we drop, we drop videos for you, analysis on what you should be looking at in the coming week. Traders Focus is always done at the weekend, especially during Saturdays and Sundays when the market is officially closed, so that we have a very quiet time, not being distracted to analyze the chart for you guys. So I've been here putting this up through. We will soon celebrate 1 year since we started doing analysis for you guys, giving you free trades, teaching you how to trade this forex the right way so that you're not gonna be losing your money here and there. So we'll soon celebrate 1 year. It's coming 2 months' time. We're going to celebrate 1 year. We're going to celebrate it in a grand style. And what are we going to do? There's something coming up. I'm going to do. I want to do a $100 trades challenge. I will always guide you guys through the way from the beginning of the trading to a 6 weeks period. We want to trade $100 to 6 weeks period and see what will come out of that $100 at the end of 6 weeks. Guys, you know what we do here? We do hype. This is the time for us to start showing our trading prowess. Yes, so that some of you who are doubters will start believing the process. If we lose a trade, we're going to show it here. I'm still working on the trading plan on how it's going to run, what we're going to be doing, how many trades we're going to take per week. You know, I'm a swing trader, so my entry might not always come every day. So to have minimum trade we take per week, going to be one to two trade, more max in a week, but mostly it's one. So one trade is okay. With the way I trade, one trade is good enough to give you whatever you want to make in the market. So we're going to trade that for 6 weeks. And then at the end of the 6 weeks, we are going to show the result. And I'm going to guide you through the way, a step at each step as take the trades. I'm going to shoot, I'm going to post it, we're going to make a stream on it, and you're going to be seeing it. Anytime we lose any trade, we're going to see it so that you'll be able to understand that there's a process. The trading forex is not always about win. You also have losses, but the ability to mitigate your loss and maximize your profit and protect your account is there. Though I understand that $100 is a very small money when in the forex market. So if you have the ability to manage $100 in two consecutive, okay, let's say 6 months consecutively without blowing that account, then guy, you are a good trader. You can manage any fund at all. So I want to guide you guys so that it will be able to inspire some of you guys who are actually coming up, so that you'll be able to know that this thing actually works. It's possible. If anybody can do it, you can do it. So we're going to head straight to today's traders focus video. I'm going to do analysis. There are some charts we are seeing here, what we are seeing in the market. And I want to let you know that the forex market right now is actually going. Few months back, the market was terrible. Most of the pairs were ranging and taking out people, blowing accounts here and there. But now, some of the pairs have aligned, while some are still ranging. But the market is giving us good liquidity, good setups, good trends. I know when the market is trending, that is when you have a higher possibility of making money. You know, I don't trade things that are too complicated. Once I try to do an analysis and I see that the market is that particular pair is it's too complicated. Guy, I leave that pair. I look for another pair that is more straightforward. I like trading something that is straightforward. Right now, some pairs are trending massively, like gold. Everybody knows gold is just trending. Euro USD is still ranging. It hasn't broken the range, but I have a trade for you from the USA as we're going to see analysis today. Then we have GBP NZD trending, gold trending, we have Euro JPY trending, we have USD JPY trending. In fact, most of the JPY pairs are now moving, and you know JPY pairs are very liquid. So when you catch one trade, guys, just a small movement can give you up to 200 pips. That's JPY pairs for you. And I'm happy that JPY pairs are trending. So we have something to trade and make money. And so far, so good. It has been good for me. The other time I banged over 250 pips in JPY. This week that just ended, USD JPY, we banked over 100 pips. The target was about okay, we banked over 80 pips. The target was about 120 pips, but we actually closed the trade at 80 pips in profit. The market actually moved a little bit above 80 pips, but it retraced. So you see, because I follow my trading style, guy, I was not caught on that retracement. Guy, the retracement was 100% retracement, guys. Though it has started going back to the upside, but the 100%, if I was in that trade, my all my profit would have been cancelled, and I would just be sitting there crying. These are the mistakes I made earlier on in my trading life, which I've learned out of experience. Guys, there's something you will learn. There's something experience will teach you in forest that nobody will teach you. Until you are ready to learn, that is when you move from the stage you are to a profitable trader. Right now, I'm doing a lot of refining on my trade right now. The reason why I'm doing that because of this challenge I want to go, this 6 weeks $100 challenge I want to go into right now. So I'm trying to do some refining so that I'll be able to accommodate to trade that type of an account. Okay, it's not really about changing my strategy, my trading style, no, but it's just to refine it. I'm trying to refine it a little bit so that we'll have a top-notch entry, a top-notch exit, and a very good stop loss. So guys, without wasting much time, this video is not going to be long because we just have a few pairs that we want to analyze and close the trader focus. We did not do the trader focus last week because the markets did not really move actually last week. So I want to share my screen right now with you guys. So before I share my screen, guys, please, you've been watching what we are doing, and you know that what we are doing, what we are telling you is the right thing. So please, if you like what we're doing, keep subscribing to this channel. Click the like button and please subscribe so that you also encourage us. But what we are putting here is we're giving you ads free of charge. So guys, you are actually welcome inside of my screen. This is Living on Forex, Life and Direct. This is where we tell you the reality of what is trading, what the forex market is all about. The truth about forex market. This channel is not for showing you the lifestyle which a lot of people want to see. Okay, so without waiting much of our time, I'm going to analyze 4 pairs: Euro JPY, USD JPY, GBP NZD, and gold. Okay, Euro USD, Euro JPY, USD JPY, GBP NZD, and gold. Okay, actually 5 pairs. So let's go straight to Euro USD, Euro USD, Euro. Guys. I told you from my video, the last video I posted, say where will USD break out from my traders talk episode. I think traders focus episode 4. The last video I just did, I told you that I made an analysis and I said, where will Euro USD break out? Is it to the upside or to the downside? And from the analysis, I told you that I'm 90% certain that Euro USD is going to break out from the downside, because we know that Euro USD since 2020, I think this is since 2020, since November 2022, Euro USD has been ranging in a 500 pips range. So we are saying, where is it going to break out? Is it going to break out of this upside, or is it going to break out of this downside? But from what I told you last time, I said from what I'm seeing, I'm 90% certain that it's going to break to the downside, and just 10% that is going to break to the upside. Now, what has the market done for us? I want to change this chart to a line chart so that you're able to see clearly what we are seeing. Guys, look at what you're seeing in the screen. This is a clear head and shoulder structure that Euro USD has formed ever since God know how. Since I've been preaching about this, head and shoulder structure on a weekly time frame should never be neglected, guys. If you have not taken anything from everything I've been telling you, don't joke with this. Once you see a head and shoulders pattern on a weekly time frame, hold it there. Watch out for that market. Sometimes it might range in the right shoulder, do some range, which is going to, if on the weekly time frame, going to take time. Yes, because it's a weekly candle. So it might range like 4 or 5 candles within the right shoulder. That's over 5 weeks. But they have not changed what they had in mind. And when they start moving it, it's going to be like a movie. You are going to see it between you. Market will be dropping pips after pips. Now, guys, this is a clear head I've circled. Usually, that's how I do. Circle is to tell you that this is a head and shoulder structure, and this is a structure that I trade alone in the market. This is what I look for. Anytime I open my chart, I don't look for another thing. This is what I look for. It's a very powerful structure. If you know how to trade it, you are always going to be right 90%, 85% of the time. So when the market gives us this head and shoulder, and it has been ranging within this red bar and this place, ranging for how many years? Now Euro USD is shaking like this, it's shaking. When it's going to explode, it's like gas. When it's going to explode, guys, it will explode, and it will trend. The trend is going to make, the movement is going to make will be commensurate with the range. This is over 500 pip range that Euro USD has been making for the past 2 years right now. This is from here to here, from here to here. This is you're seeing it, guys, 500 pips live. So Euro USD has been ranging on a 500 pips range. So if the market comes down to this one and break up all of this one, we know that the market has officially broken out of the range. What we're expecting is we're expecting the market to drop up to this point, which is another 500 pips. Because anytime the market breaks from the range it has consolidated for a long time, it's going to give us a move that is equals the range it has been making. So we are sure that once this market breaks out, we are sure of 500 pips. And guys, for all of those guys who will ride this trend with me, it's going to be massive. It's going to be massive. Just 2 mini lots on this trade, you are good. 2 mini lot on this trade is going to give you $1,000 live and direct. Okay, so even if you, those of you who have small account, I will be here to guide you on the lot size you're going to use when the market breaks. But however, guys, now I have been trading this pair, though I told you that it's a very risky game not to be trading inside this range. But then, from what I saw from last week, I call out some trade which actually hit the take profit. Now, coming to this week, what am I expecting Euro USD to do? If you look at what is going on, this is now, you know how we do the top-down analysis. We analyze, we use the monthly, weekly, and the daily. Monthly, weekly, daily, and 4 hours to analyze. Now, what basically, if you like, you leave monthly. Some people don't use monthly, but me, I like using monthly to see the overall trend. But however, if you start from weekly, it's not so bad. Now, use weekly to look at the overall trend of the market. So monthly or weekly is for the overall trend of the market. Weekly is mostly for market structure. When you find a structure like this head and shoulders pattern in the weekly, very strong, then you come down to the daily to see whether the daily is still in line with the weekly structure. Like this is a bearish head and shoulders structure, and daily should be showing you downward trend. Then if you have that, you now have a two confluence direction, one direction. You come to the 4 hours. 4 hours, if 4 hours also show you a bearish, you can also execute in 4 hours, or you execute in 1 hour. Whichever time frame you want to use for your execution, 4 or 1 hour is not bad when you're using the top-down analysis. Okay, but sometimes because of when I'm doing pullbacks, I like confirming the direction in 4 hours and executing in 1 hour. The reason because that 1 hour gives me a little bit tight stop loss. However, we'll come to entries and exits. In fact, I want to make a video after now. I'll be making a video for you guys how to set your stop loss, take profit, and how to enter a trade in the right way. That's it. That's $1 million stuff I'm gonna give out for free of charge. Because a lot of people say, if you're making money, why won't you give us? People like free things, especially Nigerians like free things. I'm ready to give you free. Okay. As far as you come back and show appreciation and let people know, or encourage us in this channel, let us know that, hey guy, it's gonna give me a joy when you tell me that what I taught you here, change your account, you made money out of it. So that when we are going to do Traders Connect in the city of Port Harcourt, River State, when we're doing Traders Connect, we will have a larger house, a lot of people who will be coming to share experiences. There is nothing that is going to give me joy more than that. So guys, this is what we are looking at. The weekly gives us the structure. We've gotten the direction. Look at this long yellow distance. This is the monthly direction showing you a downtrend. Now the weekly confirming the structure, weekly confirming the head and shoulders, giving you a structure. Now, look at what he did. He came here again, do as if he want to break this the right shoulder. He came and give us this M formation as well. This is a bearish pattern, double top and M formation. This is confirming that the market is selling. And then when you come to the daily time frame, what are we looking at? Now we have this move impulsive. The market was going up, impulsive retracement, higher high, higher low, higher high, higher high. Then when it did this higher high, it did this higher low, it did this, it broke. Now it has broken. Market came here, but it couldn't make another high. No, this high did not break out this high. It shows that the buyers are losing momentum. The buyers are taking their profits and the sellers are coming in. And then what happened? We saw this aggressive push to the downside. And now this aggressive push to the downside broke this structure. This is break of structure and the reversal signal. So when the market gives us this as aggressive, so we are not on the bearish side. Okay, so since then the market has been falling like flying fish. Falling. So if I go back to the candlestick, you're gonna see. So sometimes you use this line. So you see what's going. The market broke structure. Market has been going down. So what if you come to the 4 hours? 4 hours is still bearish. So all the time frame are aligning in this Euro USD, telling you I'm going south. This is the kind of trade I take hands-free. If I get an entry on this trade, I'm going to put more positions because it's a better trade, a short trade. I like taking things that are simple and straightforward. This is a straightforward trade. So now, the market, I take a signal here, the market drove, all this while this market drove from here down to this point. We made money, though I did not take the trade, but I actually traded it for somebody. I gave it to somebody who traded it and made money over 100, I think 100 pips. Can we calculate from here to where it is? Okay, sorry. From here to here, all this while the market ruled like this. This is over 160 pips trade, and it was sure without a single drawdown, guys, a single drawdown. In the other profile account, with enter the trade, it was sure, no drawdown. Now, coming to this week, what am I looking? I'm still looking at placing another trade in Euro USD, and this is just an 80 pips target trade. 80 max, 120 something pips. That's the max target. The reason why did I say so? Now the market came to this region, the market could not break it. It respected it and retest and now went up. Now the market is coming back down. Remember, this is a downward market. So this aggressive candle you saw here, this aggressive candle you are seeing here, see what the market did, impulsive, retracement, impulsive. Now it behaves at it as if it wants to change trend, but it came here and respected this zone. And then the market, and you see this aggressive move here. When you see volatile candles like this, don't neglect them. It's telling you that this direction there is momentum. There is strong momentum here. So this is confirming to me that this market is going to come down back to this zone. So what we are waiting for when the market comes, this might be a liquidity grab. This retracement came here to gather liquidity, to gather momentum, to come down to this dive. So I am waiting for this market to officially break out of this region, because if you look at this region, it has been holding it, preventing price for how many times? 4 times. So we are waiting for this market to clear this region. Guys, this thing has taught me a lesson. I've lost trade a lot when I'm not patient to wait for market to clear regions like this. Guys, if this is your problem, learn this. This was my problem, and I've learned. In the market, this kind of thing will help you to avoid a lot of junk trade, a lot of losing trade. When you are patient enough, allow the market, even if you see the market here, allow the candle to close. 4-hour candle. Don't do 15 minutes, because inside 15-minute candle, it might give you a rejection. Then another 15-minute candle come aggressively down below. So that would 15-minute candle that give you a little bit rejection, you will say, it's a signal. It has respected it. You start buying. Before you know it, before the 4-hour candle closes, the another 15-minute candle just drop and take you out, and the market continue the downward trend. So Don't use 15 minutes candle as your as a yardstick to as a signal trigger. Please use 4-hour candle instead. Wait for the 4-hour candle to break with an aggressive move down below. Clear this region, all these pins area, clear this red bar, come down, end below. Once that happens, I'm teaching you a stuff free of charge. This is how to enter your trade. Once that happens, once that 4-hour candle close below here, a confirmation has been taken. Break of structure has happened. Now we know that you are on the safe side, on the other side of the puzzle. Now that is when you can come to your 30 minutes or your 15 minutes to look at a retest with a pin bar. Okay, because once that 4-hour candle close, you will take another 4 hours for another 4-hour candle. But we know that the next 4-hour candle will close down below. So, but before that happens, it market might come back and retest here, and that will happen on the lower time frame, like the 15 minutes and the 30 minutes. You come and see a touch around this area, and once that 15 or 30 minutes touch here and give you a pin bar, that rejection, a weak here or an engulfing bar, then you know that they've come and grab liquidity and they are ready to pull. So that is when you pull the trade at the close of that candle, either that engulfing bar or that pin bar. At the close below, you pull your trigger and you ride this trade down to this point. This is the first target region. This is the first target region, this region here. Look at the left. You always look at the left to know what's happening. So this is why we choose this struggle, because of this. The market might come here and do pin bar and reverse. Or because we are still on the range, guys. This is why we are taking this. We are not riding 500 pips, 200 pips. We are being conservative. We know that once this market clears here, nothing else is stopping it. So we know it's coming to this liquid point, this other block in this area. So we take here and go. But this is the first target, and this is the second target max. In this environment here, this environment here, this environment, and this is over 130 pips. So 80 pips target one, 130 pips target two, and you are done. Close your chart. Don't wait. We know it might, if it gets there, if it breaks there, it might come down to this other side. Down to this other region, but don't wait for that. Allow the market. Once the market comes here, allow the market. But we know we still have a lot of trading potential. Once the market clear this environment, we all have this 500 people range to trade. It's really an opportunity, so there's no need to stay too much. So to be on a better side, I rather take that 80 pips and leave the 100 pips, 130 pips target. The reason is because, hey guy, this is a range. The market is still in that range, so anything can happen. So for me to be very conservative, it's better I take 2 entries on that 80 pips and I'm good than to wait to ride the 130 pips. If we have a trade that will going to give us 230 pips for, I will tell you, but not for this. So this is a 80 pips target max, and you shoot your trade and you go. So if you're using your standard loss size, 80 pips is going to give you $8,000. Sorry, $800. $800 life, and that is not a bad one. But if you're using your mini lot size, 80 pips, $80, you're good. So for those of you who are trading smaller accounts, you know the lot size to use. So guys, that is for Euro USD. So Euro USD is what I'm looking, is one of the pair I'm looking at trading this week. You know, I will not take 5 trades in a week. And my alignment this period is 1 to 2 trade max every week. 1 or 2 trade, 1 to 2 trade max every week. We are not doing anything above that. So if that 2 trade are losses, we are done for the week. Okay, so the next trade I want to analyze for us is Euro JPY. Euro JPY. Now when it comes to a weekly time frame, you see what I am seeing, guys. This is head, this is left shoulder, and the market is within the right shoulder. So guys, though people will say this market, Euro US, Euro JPY is buying. On the weekly time frame, the market was buying, see this impulsive retracement, impulsive, until the market did this aggressive push and change of structure. The market break the recent pullback, this recent retracement level. It broke the trend, and then the market is trading below that. So we are in a bearish phase. And look at the structure the market is giving us on a weekly time frame. And I told you guys, when this market start dropping, you're going to make serious money. What are we seeing here, guys? We are seeing head and shoulders pattern. Head and shoulders pattern. Head, left shoulder, right shoulder. This is a bearish sign. Now, okay, so guys, Euro JPY weekly time frame is showing bearish. Let's see what the daily time frame is telling us. Daily time frame, impulsive retracement, impulsive retracement, impulsive change of character, higher, high, higher, high, higher, high. So um, daily time frame is showing us bullish because if you move your trend line to here, the market is making series of higher highs. So that is another way how to spot reversal. When you see the market making series of higher highs, you see 1, 2, 3. Market is making series of higher high on the daily time. So daily time frame is showing bullish, but however, the market is currently at the neckline, the right shoulder of the weekly time frame. And look at that consolidation there. That should tell you that they wouldn't want to trade more than that point. So we are waiting coming this week. We are waiting for what the market is doing. So weekly and daily are telling us two different directions. What is the 4 hours telling us? The 4 hours is telling us bullish as well. So 4 hours is aligning with the daily. It's always aligned with the daily, bullish as well. Look at that impulsive retracement. And if you start from here, impulsive retracement going up, 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 retracement impulsive. Now the market has been ranging around there and then it gives us a little push, but not as strong as it's supposed to be. Give us this return and the market is still ranging. For all I care, this market might give us an M formation here. Market might just come up a little bit and drop, giving us an M formation. When you use your line chart, you'll be able to see you see the M formation forming. So this market might drop. So despite the fact that daily and 4 hours is telling me it's buying, my weekly is giving me a structure, and I'm always seeing. I always know that my weekly is more reliable, and I'm going with my weekly. So what am I looking at in this? Remember, I told you the weekly, the daily, and the 4 hour is for direction. So this trade, are we going to trade Euro JPY this week? The answer is no. We are not going to pull any trigger yet on Euro JPY. The reason is because the market has not aligned. You see the first one, Euro USD, everything, all the time frame aligning to one direction. It's easier like that. We trade and we go. But this one, the weekly is telling us bearish, daily is telling us reversal, that is bullish, 4 hours bullish. So am I going to pull a trigger? I'm not going to pull a trigger. Now, I am 85% have the possibility. 80%, okay, I will say I'm 80% certain that it's going to break, the market is going to break to the downside, and 20% certain that it's going to break to the upside. You always know that my analysis are always right. So I'm certain that it's going to break more. I will say that the market has higher possibility of breaking to the downside than to the upside. So forget the fact that the market it has a little bit, this is our resistance, it has crossed it a little bit. And if you look at the momentum is not strong. So the market might as well aggressively come down below it. And this will be a fake out. Okay. So the only time I'm going to pull a trigger looking at trading Euro JPY is when the market breaks, come straight below this point and break this red bar. Because this red bar this market made me lose a lot of trade. I've been going below, knowing that this market is full, but when it comes here to break, it has always been respecting this region. So I'm going to wait for this market to break below this region. Down below, then I'll wait for a retest. I want the market to do something like this, aggressive, then give me a pullback in that region, then I'm going to ride it down. And this trade if this happens, guys, if this happens, this is going to give us a very sweet trade. That this is going to give us a potential trade of how many pips? Let's see. So if we write the first target, if you take this trade here, if you take this trade here, so we're going to target here. So enter this trade here, we're going to target, the first target will be around this region to be more conservative. And this is over 294. I'm sure this is over 300 pips target. I'm going to target here. This is over 300 pips. See, from here, from where it breaks to here, 300 pips. And if it breaks there, it's coming down to this region, which is over 550 pips. So I'm going to prefer the 300 pips potential trade. And this is kind of trade that changes your account. A standard lot size on this 300 pips trade is going to give you good money. Very, very good money. Very, very good money. It's going to give you like 3,000 pips, which is a reasonable money. So guys, so I prefer, and the market might as well come and do this. The market might as well come and buy a little bit, touch this trend, and fall down back. I'm very sure that this market did not come and fall from this head and shoulder structure just for nothing, guys. I'm not sure that's going to happen. So Euro JPY, no trade yet. We're not going to put the trigger until this happens. Just what I explained to you. Now, USD JPY. Okay, let me leave GJ. Let me leave GJ for now. Now, USD JPY, the same thing is happening. When you look at the weekly time frame, the market gives us this head and shoulder structure again. So the JPY pairs are all aligning, speaking the same language. This is a head and shoulder. This is when you see how the market expected it came here, the same thing that come. Now the market is around this environment. Let me use this other clean charts. See, the market is around this environment. Let me remove everything here. Okay, so the market is around this environment, head, right shoulder, and it's around this environment. So we are waiting for a confirmation. And so look at what is happening. So the market is already giving us a little bit of rejection in that region. So you can see what is going on right now. So guys, head and shoulder structure, I'm still starting 85-20, 85% that this market is going to drop to the downside. And once it drops, this is where it's coming to live and direct, this environment. And this is over how many pips range. From here to that point, this is over 1,000 pips range. So aggressive. You know, Euro USD JPY has been one direction for over God knows how many years. So it's going to give us a pullback commensurate with the way it has trend. If not up to it, at least going to give us at least up to 50% pullback, even if it wants to continue to the upside. So if it does that, then we know that this market is sweet. It's going to give us a good trade potential. So guys, Euro USD on this week, we are not pulling any trigger. What else are we looking at? So we have one trade already. We have one pair already. We are looking at trading, which is USD JPY. Now we are moving on. We are moving to gold. Gold. So guys, gold is monthly bullish, weekly bullish, daily bullish. You see the kind of trade we like taking. Daily bullish, 4-hour bullish. So impulsive retracement. As if it wants to take, but it has continued the upside. So we are waiting. So what are we looking at trading this gold to come this week? We'll just wait patiently for the market to either break. If the market breaks here, wait for a retest and then continue to the upside. If the market comes here and respect it, we'll wait for it to come here again and look at what happens. But we know we are looking for buys, we're not looking for sales. So if it comes back here and give us a touch for the third time or for the fourth time, this is 1, 2, 3. Come and give us a touch and give us a P-bar or a confirmation candle telling us that it's going to buy, then we'll continue, we'll ride it to the tops. And this is over 4,000 pips range. That's massive. So What we are looking at, we are looking at trading gold, buying opportunity, Euro USD selling opportunity, and then ETP selling opportunity. Then the last pair we'll talk about today is I'm not going to talk about GBP JPY because it's almost the same thing with the other JPY pairs. So we are going to talk about the GBP NZD. Now it has been a long time I traded this pair. After the pair gave us last year December, the pair gave us 500 pips. We made money from this pair. Since then, the pair has been ranging. We avoided it, not knowing that the pair want to change trend. We sold. It was selling last year. By this time last year, this pair was massively on sale. But now the trend has changed. We noticed it. The trend changed around Monday, 30th September, when the market break the trend, the overall trend. This is where if you go to the weekly time frame, you see when it broke. This is the trend. The market broke the trend. This was our trend. The market has broken the trend, and now the market is on the bullish trend. So since the market is on the bullish trend, weekly is telling us bullish. Daily, we are on bullish, the impulsive retracement, double bottom, impulsive. So it's on the bullish side, and then 4-hour positive consolidation, and impulsive. So 4 hours is still bullish. So GBP NZD is clear, Euro USD is clear, gold is clear. So these three pairs are what you should be looking at trading this week. GBP NZD, Euro USD, and gold, because these are the clearest. GBP NZD, all the time frame are aligning that is going up. Gold, all the time frame are aligning that is going up. Euro USD, all the time frame are aligning that is going down. So these are the pairs you trade. See, when you make your selection like this, you know what you should be trading come the week. You will not start looking for pairs. Hey, no entry. Let me look for pair and trade and do markup. When the market is open, anxiety will be there. You're not. You already know what you are looking for. This is how professionals trade. You already know what you are looking at for. So when you open your charts come the week when the market is open, you're just looking at those three pairs: GBP NZD, Euro USD, and gold. That's what you should be trading. So you can write it out somewhere. Once I open my chart, I'm going to GBP NZD straight. What am I going to? I'm going to look if the market has done what I'm expecting it to do so that I will enter my trade. If I go to Euro USD, the same thing. Has the market done what I expect it? I pull my trigger. If I go to gold, has it done what it has done? That is what I'm looking at. If the market did not do any of this, I hold my trade. I'm not tracing any trade. I hold myself. Now, GBP NZD, I've done the markup for 4 hours. Now the market has broken this structure, and with this, if you look at the daily time frame, the market gave us this strong break. And when I see volatile candles like this, I don't joke with them. It tells you that the buyers are willing to buy. They are ready to push this thing. So what I'm waiting for, the daily candle has closed above. 4-hour candle have given us breakout, retest, and has gone. So we could not catch it here. But however, we are waiting for the 4-hour candle to come back and give us either a retest in this region, this region, or give us a deep pullback here, and then we are looking to buy. We are not selling. No matter what the market does, we will not sell. In this trade, we are not selling. If you sell, the market is going to bite you. You want to trade against the big boys, and you cannot. Cannot win the big boys. They will always win. So follow the trend. The trend is your friend. So we are waiting for either the market to pull back to this region, or gives us a deep pullback here and a rejection. Then we can now come to either 15 minutes or 1 hour, or 30 minutes or 1 hour to pull our trigger. But from what I'm seeing, I don't think that market might do that deep pullback. But however, anything happens in forex can give us a crazy pullback to this region and then start buying. The reason why I say it might give us crazy, look at this region. This is where there are orders, a lot of orders. So it has broken there. So we're expecting it to come back to that region, give us the retracement either here or there, and then the market is ready to rise to the upside. So this is what we are looking at for come this week on this pair. So is either the market support, find support here and continue, or find support here. Either way, we are waiting to pull the trigger. So if the market does here and give us an entry, this is where you should set your stop loss around this environment. But this is the next place where they have where the move begin. This impulsive move. This man that took this market here, where he is, this is where your stop loss should be. So your stop loss should be something like this. Let's say you put the trigger here, your stop loss should be below this point. Okay, so that even if the market comes and do some liquidity grab, because the market always does liquidity grab anytime it wants to go to that, it will pull back a little bit, gather liquidity before pulling. So even if the market wants to do liquidity grab, you are safe. You can just come within that region and then continue to the upside. So guys, that is that for that. I've been able to guide you what you should be trading, and this is how many pips trade potential. This is GBP NZD is a very liquid pair, so I know it's going to give us a good trade. It is just a small move, but we are targeting 200 pips, 210 pips, 210 pips target. So what we have is Euro USD 80 pips target, GBP NZD 210 pips, and gold might give us a potential of 4,000 pips. However, whatever happens in the market of gold, we are waiting for a pullback or a breakout of the region. If the market breakout, then we're going to continue the buy. But the market comes and tests the resistance and then drop. Once it drop, it's giving us a pullback. We will now look at the next liquid point where the market will find support. Then that's where we are pulling the trigger to the upside. That's what we should be looking at gold. So the shortest GBP NZD Euro USD, GBP NZD 200 pips target, 200 pips target, 210 pips target, while Euro USD 80 pips target. So if you combine these two trades, what else are you looking for in the market? You cannot be sitting on your screen every day trading like the day traders. That is why I say they are called jump trader. I'm not saying the day traders don't make money, but majority of them is only those who already know what they are doing, who have find their urge. Okay. But when you trade like this, you have lesser possibility of losing your trades. So this is a 200 pips. So if you make this, if this is just the trade you took for the week, you made 200 pips. So depending on your loss size, you are done for the week. So with the account we are trying to make, if we make this kind of trade, mini lot size, 200 pips, that is $200. We made $200 out of $100. That is over 200% return of investment in just a week, doubling the account. That's massive, massive. Even if you use mini lot size, half of mini lot size, which is 0.5, 0.05, that 200 pips is going to give you $100, which is 200% of your account. So anyhow you do it, it's a win-win. It's a very good trading style to imitate. Then the Euro USD 80 pips target, very nice. Mini lot size on the ATP, that's $80 with $100. Then you have 80% return of investment. So guys, that is that. Thank you for staying true to this video. I say let me guide you on this Trader Talk episode 5 so that some of you will not say, has he run away? People like bad news. You just want to say, hey, that trader, has he blown the account? Has he run away? When they don't see you again, forgetting that you have other things you're doing. But I know I got your back. No matter how busy I am, I will always help you guys. You guys are my G. You guys on this YouTube are my G. I will always be there for you guys. I'll always guide you through. So you're off of my screen. Thank you very much for staying true to this video. Please keep sharing this video. And if you find any gems, if you take any of these trades we call out here, please kindly drop a comment. Tell us what you feel about what we did and how the trade went. Just tell us something so that it will motivate us to keep doing that. So thank you very much. Keep sharing, like, and subscribe. Please subscribe and share this channel to your friends so that they will be able to learn. In my next video, I'm going to teach you how to set stop loss, how to enter your trade. I think I've given you some tips on this video, but I will explain that in details, how to understand when there is a liquidity grab, especially on gold and some other volatile pairs. How to understand when there is a liquidity grab, because when you enter your trade after a liquidity grab, there's 99.5% that trade is going to be a winner, and you have you have no drawdown, zero drawdown. The only minus you will see is the broker's charge. That is how powerful liquidity grab, entering the trade after liquidity grab is. So most times you might not get it right, but if you understand the behavior, you are putting yourself on a higher possibility of always profiting your trade. So thank you very much. Thank you very much. I'm going to see you in the next video. Thank you for staying true to this video. This is Living on Forex Life and Direct. Please observe everything we do here. Observe what the market does, and then you see that what we are saying is the real truth. So thank you. I'm signing out right now. Peace out.